I would welcome to the panel now the guys who want to make the change in this industry. So I want to welcome Cosmin, who is the founder and CEO of LaterPay. Please welcome Cosmin. I want to welcome Erik, Podzuweit, the founder and CEO of Scalable Capital. Erik, welcome. And I want to welcome Ingmar Stupp as a co-founder from Blackbill. So guys, you are the best telling about your business yourself. So maybe just 1 minute marketing pitch. Cosmin, you want to start?
So LaterPay has developed, if you want, a running tab for digital content. And the idea is that users don't want to register and pay before they know what they are getting. So basically, they just confirm and accept to pay later. And then we create a running tab and keep track of all the purchases until they reach €5. And then they register and pay. So basically, instead of forcing people to pay, you give them benefits first, let them convince themselves, and they pay later. And this is what works currently for journalism and for video, and now soon for other digital content and services.
How many markets are you active today?
Right now, Germany and Austria, which is easy because it's German language, but we are just starting to go international. So I think beginning of the next year, we're going to announce something.
Great. Erik.
Yes, Scalable Capital is an automated investment manager. That means we create and fully automatically manage ETF index fund portfolios for private investors. So the fund selection, the monitoring, the risk-adjusted rebalancing is all technology, is all software-based. And since it is software-based, we believe we can offer a fiduciary investment management service cheaper and in a more convenient format than what you can get in a banking branch.
Ingmar.
Thanks for the introduction. I'm in charge of the operations at Blackbill. Blackbill is a factoring company. Factoring by itself is not a new service. It's been done for hundreds of years, but the factoring service is just not available to a certain part of the market which is in desperate need of working capital financing, which is particularly the freelancers up to the S of SMEs. And we are specifically targeting that market segment and offering a recourse factoring service to them. So they can upload their invoices. The web designer who works as a freelancer, works for Axel Springer, for instance, he can upload his invoice and get a invoice-backed loan for it.
Thanks. So you founded 2016. I think you founded 2015. Is that right?
Yeah, 2 years ago.
2 years ago. Ingmar, when did you found your fintech company?
2010.
So, as you're longest in the market, what do you see were the biggest challenges when you started fintech? And I think at that time, there was not a big fintech hype. I think this word didn't even exist. It was called payment, maybe. And what were the challenges? And what did you see also with what developed in the last 5 years, and where they guys maybe can, and me as well, could benefit from?
I could boil it down to 3 main points. The one is there's a big challenge in understanding and accepting innovation, especially in the German market. Like, everyone is looking to the US. First question is, did anyone do it there? How successful is it? How does it work? As if everyone is trying to look for the McKinsey effect. Like, they did it. It worked or did not work with them, so we did it. It may work, it may not work with us, but we have no risk in it. So there's an incredible risk opposing way of looking at innovation. So accepting innovation and putting it to work, I find the most difficult trait of many companies also in Germany, especially the ones who really need innovation, like publishers. They could do so much because there is so much out there already, but everyone is going with a metered model of the New York Times, even though they are not the New York Times. So there's this lack of self-confidence in trying out new stuff and putting it to work. Number 2 is that when they think they understand what you do, they think they could do it themselves. So while in the US and in other countries, usually companies try to work with one another and just say, okay, this is our core focus. Someone does something that helps me. I'm going to hook up with that and put it to work for myself. Here, you often see this reluctance, which turns into, could we do it ourselves? I mean, it's just payment. And then you find out that payment is a bitch, and you cannot do it if it's not your core business. And I think the third one is that things take much longer than everyone expects, and there's this new shiny thing effect. So you have a new startup, it promises something, if it cannot deliver by X month or a year or two, it's kind of dead, and there's a new shiny thing coming up. So the people don't have the perseverance anymore to wait for things to develop and to catch up with markets. So I think these are the three main points that we experienced.
Erik, the first thing, I mean, confidence. You are confident that you build a better robo-advisor than the market there, I would say. The second challenge, as Cosmin described, where do you partner basically, or is there enough partnerships in the market? What's your answer to this before we come to the third point?
I mean, coming to the point of partnerships, yes, we partner. I mean, because we, exactly what you've mentioned, we specialize on one certain segment, which is the onboarding and the money management. But other parts that concern money management, we don't do. We don't do custody, we don't do brokerage, that we have outsourced to a banking partner that we work together with. Because if you build everything from scratch, it's enormously costly, and you lose your focus. So there are partnerships on the distribution side. There will also be partnerships, simply because there's a huge market to address. We think we have a good solution, and partners are interested in providing this to their client base.
If I may add to this, because regarding partnerships, I 100% agree. I mean, we were lucky to receive a huge budget in our seed round in July when we started. But with this short schedule to develop a prototype and bring it to the market, it was just not feasible to really build a product that covers the whole process. So it's no secret that we also partner with Solaris Bank. This is one example for that. And of course, regarding, I mean, it's a factoring business. We are essentially financing invoices. We are looking into partnerships with the invoice creators as well, because this is our way to reach our customer more efficiently. So it's about focusing on the core assets you want to build up.
So I couldn't agree less. I think partnerships is a core differentiator to new fintech firms. Instead of this all-in-one bank who did everything by themselves. If we really want to build a fintech ecosystem and work with the right partner to everyone can concentrate on their assets they deliver, what do you think needs to be changed in our industry, or what needs to be more enforced when it comes to rules, when it comes to the industry itself? Are banks already good in this and playing an ecosystem games? Are we startups are good enough in playing that games? Erik?
I mean, also coming back to the discussion that was here before when Jens Spahn was here and talking about regulation and fintech sandboxing. In our experience, it's not necessarily that regulation is too tough per se for fintechs. It's rather that certain laws are too old and can't be applied to the new world of doing things. And I don't mean lighter regulation, I just mean especially when it comes to media breaks. In our segment, there is by law, just certain things are still require wet signature on paper. Even though the customers don't want it, even though the financial institutions don't want it, it's just red tape, it slows down the processes, but there are old-fashioned laws that still require that. And so what I think, or my wish for regulation and to enable better connection, better partnerships, is not necessarily easier laws, but just more modern laws, especially when it comes to this online-offline media break. And I mean, just to add to your first question that you've asked, what are the big challenges in building a fintech? One challenge that we see, which is I would say higher than in other markets like e-commerce, for example, is the trust factor, especially the segment that we are in, where we manage other people's money. We need a substantially higher degree of trust. And there's the question, how do you build this? And one thing is you can build this through partnerships by basically piggybacking on someone else's brand to lend you trust in a state where you haven't built up your own brand yet.
This is a very interesting discussion. Partnered for trust. Cosmin, do you have any views on that?
I wanted to add something to the question that was before. I think that one super important aspect of growing this whole market is the financing side of it. And I think that in Germany, I don't know if any investors are in the audience, but it's as a VC investor, it's kind of a nightmare to be in Germany. Like you're paying the 19% tax on your management fee, which is, I think, like one of its kind worldwide. I don't know if there's any other country there where you have this nightmare. And like the total investments in Germany are about 750 million in startups across like all industries for 1 year. In the US, it's 55 billion. And even if you compare the size of the country, we don't have enough money. And I think it's building up, and I think that the government has to do something to make it easier for people to put money in innovation, because we don't know whether it's your company or my company or his company is going to succeed, but we need to try a couple of things, and we need to somehow enforce more investments into this whole industry to become competitive and to have the slightest chance on an international scale. So I think the government has to do a lot there. It's not much, but basically they are totally blind on that kind of improving the situation for VC money. And then I think the whole ecosystem would benefit enormously from that.
I have a maybe a little bit provocative theory. If we say we need to build up trust, and maybe we can build up trust through partnerships, and on the other side we need revenues. What I don't understand, every customer in Germany wants better banking products. So why don't we find a partnership with our customers who pay us the revenues everyone deserves to build a better banking product? Because we only need the investor money to build up this product. So maybe the question in the audience, would you give your money rather to established German bank for wealth management or young startup? You don't need to answer now. But why don't you give it to a startup which is totally transparent? And I'm not advertising Erik, it could be other wealth management startup. Or why don't you not working with a new factoring company or using LaterPay? Instead of always running to the same old folks, which didn't build trust a lot in the past. I mean, they did a lot. Look what Deutsche Bank, how many lawsuits they have. And so I think we should all work together more when it comes to partnership, on the partnerships, building trust to the real partners we need, and it's our customers. And I see it way more easier in B2B businesses. I think you're, as a Blackbill in B2B, you also, I think, sort of B2B. And we shifted 8 of 10 of our portfolios now B2B or B2B2C. And I have the feeling, Erik, I don't know what's your view on it, in B2C, it's a big challenge to build this trust or to actually get the trust from customers. Yeah. However, maybe there needs to be more education also in the market regarding those new players.
I mean, yeah, certainly it's in B2C, it's the hardest to build trust, obviously, especially with a new brand. And when I meant partnerships can lend you that trust, the funny thing is with banking, its reputation and the trust element is people don't trust some of the financial products that are being sold. Yeah, so if you go into whatever a banking branch, you want to invest 10,000 euros in capital markets, you go into a saving bank, you will walk home with one of their sales products, usually a fund from Deka. People don't trust in that anymore. The stability of the financial system, they, however, do trust. Yeah? So, I mean, I could name a couple of the bigger names. They don't trust the service on the service level, but they do trust when it comes to general stability. So basically, when they ask us, okay, you have these models, how you manage my money, but where does my money actually sit? Do I really give you my money, or does the money sit with a German regulated bank, a financial institution, they still want to hear that. So there are different level of trust. One level is on the service component, the products, and the other is on the general stability of a bigger financial institution.
How do you see this, Ingmar, in the B2B business? How goes trust there?
For us, it's a little different, to be honest, because, I mean, in wealth management, everybody knows the product and they have a place to go to, or they had a place to go to, which was the bank. And now there's an alternative to that. For us, it's a little different because we are doing factoring in a market segment that doesn't even know the service. Most of our customers don't even know the term factoring. So yes, we have to educate, but not only about the trust factor, but also about what we actually do. Because to them, it's a completely new thing. So there's another level of challenge for us in that regard.
I think that there's what I see a fundamental challenge there, because we live in a saturated market, and we're trying to come up with new models that should impress or get people to use our services, but we look at it from kind of a top position, and we assume that people need our services and want our services, and I think there's a lot of education to do to make people understand what's so special about our services. Like, you make it easier for people to pay, like for real products. We make it easier for them to pay later for digital products. But basically, people don't really have too many problems. I've never met someone at Edeka or wherever, the supermarket, saying, "Oh, I don't know how to pay." Credit card, debit card. Most people still pay cash. We have, 90 million debit cards in Germany. It's not a credit card country. But no one has a problem paying. So then you come up with new ways of paying. And the first question is, do I really need that? I mean, is this taking any minute in my daily life? Do I need to think about your services or yours or mine? And I think most people would say, probably not. So only when you stumble upon your service and you see that basically with a little bit of money, you could give it to an algorithm that makes more money out of it, and you tell it to friends, and someone did a positive experience with that, that's when the sharing component comes in, and when people start to understand the benefit, kind of a benefit. So I think we are pretty much up against a hill, while compared to the US, where you have so many things that are fundamentally broken, and every startup that comes up and fixes the problem gets a huge gain in this market. We don't have the same landscape here. So we are in a saturated market, and I think that the educational part of it is still going to take a lot of time, but pays out in the end when you can take it through that long period.
Yeah, but I completely agree, especially with your last comment about creating a referral basis, because this trust element does not always have to come from you directly. It can also come through your customer base, and I think there one of the really important things to do is focus on a niche market first. That's at least our approach. So we focus on a customer base that we call smart, busy professionals. Yeah, so people that they have a university degree and they've studied either business, computer science, or engineering. Not that we don't want other customers. It's just it's very hard and very expensive to get these customers as a new brand early on. So we focus on this niche audience, because this audience, so I assume, like, I don't know, people like you, they are seen within their social environments as opinion leaders, as smart people when it comes to money decisions, internet technology decisions. So if you focus on them first, and then you build a referral base that can refer you more into the mass market, I think that's a strategy that can help you building trust through this focused customer approach.
Okay. Referral is a good thing. So partners who refer you and delivering trust. Is there something we can you imagine something which we can like build together, like a fintech app store, which is, I don't know, trust by the state, trust by banks, trust by... Because we run all the time to the same partners, I have the feeling. We run to the same banks, we run to TÜV, who's paying, need to pay 10,000 euros for a small sign on the bottom. Isn't there any more innovative way how we can accelerate and transfer those trust? Any ideas here?
I would say no.
No?
I think, again, all comes back to the user and where he wants to go to. And I think establishing another entry point and just saying, look, here's another shiny storefront to something that you didn't even know existed and you needed, it's kind of a big stretch. So I think the challenge is to be in front of the user wherever the user is. So if you partner up with banks, if you find a bank that would go for your services and promote them to their own customers or put them in front of their users and say, look, here's a smart way of how you can do this and you could expect this. I think this could be a better entry point than to have another store, because every time when the big representatives of a market, so let's say of the publishing market in that case, which I know, when they gather and just say, let's do something together, it's just for themselves and looking through their own eyes to the audience. But it's not user-centric. And as long as you build stores and ecosystems which are not user-centric, I think you're not going to succeed with them. I mean, tell me more than 3 examples that really succeeded in creating like successful ecosystems.
But isn't the partnerships would like really also increase trust? I mean, me myself as a early number 26 customer in the beginning, there was just a name, a website. I read about it online, but knowing that there's a established, I mean, okay, Wirecard is a startup itself or has been a startup, but established bank behind it, partnership again. That actually moved me to become a number 26 customer. So.
And you didn't quit when they changed now to their own bank?
No, I didn't.
Okay. So, but no, what I mean is that how we can. I mean, I totally agree that we need more trust for fintech startups. That we need to do that through partnerships. But are there ways to accelerate that? And something like you trust the apps you download to your phone also, in a sense, because you know that they're proven before by, let's say, Google or Apple. And is there something like a Bio-Siegel for fintech companies? Is there something where the government needs to do something for it? Would it help you, Erik, for your business? If there was like...
I have to think about it. I mean, also within the fintech segment, even though they're all called fintech, even the companies that sit here, the business model can be vastly different. I mean, you basically, as I understood it, you give credit to customers. We basically take money from them. So actually, there are different kind of trust level and trust directions. For example, you have to trust your customer. Yeah? And for us, it's almost the opposite. Yeah? I mean, people have to trust us that we don't run or that the algorithm does something crazy with your money. So I wouldn't know out of my head whether there was a one-stop solution. I'm always a bit concerned if you had this monopoly of handing out trust, just the trust signs, whether this would, I don't know, whether this would just alter the market in not a good way. How it's currently, I mean, everyone has to struggle for trust. Everyone has to build a concept that makes sense. Everyone has to develop a pricing mechanism that's trustworthy and get this referral base. And I think that's a very good mechanism to build trust rather than have a centralized planned system that hands out and decides which companies deserve a trust sign or which don't. I think that could be quite dangerous in my mind.
Okay, no solution for building more trust. Coming to other challenges.
No, I didn't say that. I didn't say there wasn't a solution. I just said it is more the decentralized, capitalistic approach to it is the best.
Yeah.
Is it perfect? No, of course not. But everyone searching for a different partner, me deciding which German bank, I don't mean the German bank, but which German bank will I sign up, or do I take one from Cyprus? Do I apply for a BaFin license or don't I apply for a BaFin license? Okay, do I get a license from Luxembourg and use it? And in the end, this struggle for customer trust creates a trustworthy system, not a centralized system.
I agree everyone needs to build an own product which is perfect for the customers in the end. The only danger I see is that a lot of our money goes, instead of building technology, goes to ProSieben, Axel Springer and all that folks, and big marketing budgets, and Google, of course, and big marketing budgets, instead of using this money and building better banking products.
Well, but you have, through them, you have the window to the user. So they put you in front of your users where you can gain trust or lose it. But if you try to create a union of the market participants, they are going to try to protect their own achievements and come up with their own goals that they are going to push through the door. Look at the publishers. How many publisher alliances did we see in the last 10 years? And how many of them were successful? 0.
There are certainly examples where this was needed, lots of marketing budgets, but just the big names that fly around, especially in the German Fintech scene, they didn't need that actually. Number 26 has a marketing budget which is smaller than, most of the smallest e-commerce shops that you know. They hardly spend any money on marketing. Yeah? And not saying that it's relevant, they have to do that as well, but if you have a service that's convincing and that has this referral base, as Cosmin mentioned, you can focus on your technology actually, and you can do it without making the broadcasting nations rich.
So despite trust and getting the customers, what do you see for challenges by building your product, coming to technology, processes? What kind of challenges do you see there?
Well, as Erik already said, for us it's different, right? It's rather that we need to trust our customer because we are giving him money, and not only our customer, but basically the customer's customer as well, because we are in a recourse factoring model right now. So definitely processes are the challenge for what we are doing, because it's basically centered around the risk assessment of our customer, and this is information driven. So in our process, when the customer comes to our website and our current brand, bezahlt.de, we ask him to connect his bank account, to have information about his creditworthiness. And this, on the other hand, it's true, has the requirement for us to be trustworthy for the customer, because, who would connect his bank account and provide banking data to a company, to a startup he just Googled and found on the web and hasn't heard about? For us, it's bi-directional, actually, the trust topic.
Another challenge I would ask, do you have challenges in finding the right talents?
We are in Berlin. Makes it easier.
Easier, but it's still a challenge?
Definitely.
Our experience, so we have Fintech, Fin and Tech. The Fin part is very easy. Everyone wants to leave the banks. The tech part is hard. Yeah? And we are not in Berlin, we are in Munich. It's a different ecosystem. You have more people with an engineering or IT background, but you also have the big companies, Siemens and those guys, employing lots of these people. So I think it's maybe as hard and even more expensive than Berlin. So the tech part is actually harder than the Fin part. Yeah? The Fin part is really, we get outstanding CVs and applications from the financial industry. The tech, I would even say that technology people are what bankers used to be 10, 12 years ago. Yeah? Popular, well paid. And that's actually a hard challenge. This also, for our team, our technology team, I would say 60 to 70% consists of non-Germans. Yeah? That we literally had to hire. We hired 3 people directly from India via a blue card, and you have to do international recruiting, especially if you want to scale it up fast. Yeah? If you want to build up a technology team, and I think you did it in 3 months, in 3 or 6 months, because these people are all employed. It's hard to get them out, so you really have to search internationally.
So we pivoted regarding the way how we hire people. At the beginning, we didn't find enough people in Munich, so we, thank God, Slack came up. So we basically developed into a decentralized company, started hiring wherever we found people, and all of a sudden, at the beginning we got no one, then we got the first people, and then now we get between 100 and 200 applications every time we put out a job advert. And because the frills are, you can stay wherever you are, and we pay you a couple of things, but basically you stay there, you work from there. So we have people in Canada, in Brazil, in Germany. We have just 30-something people, but only 6 of them speak German. And that reduced our cost and at the same time brought incredible brain power to the company. We got really bright people. So basically right now it's not the problem finding people, but it's more how do we manage, let's say, team and budget. And that brings me to the second part of the answer to the question that you raised before, which is I think that one of the biggest challenges that German startup tech companies have is to find the right investors. The right investors who are going to stay with you, let's say in 2 or 3 years, if you find out that your original business model doesn't work out, or you need to pivot, or you need to do something, and who have the stamina to stay with you and take you through that difficult time. And not many that I know of really do that. So I think finding the right investors means, and I know it sounds so easy and it's so hard to do, but many times saying no when you think that the investor that you're going to take on board may not be the right one for you. Because if he doesn't go along with you, and he knows better than you do that you're going to fail, you're going to have hits and misses, and if he punishes you for the misses, you're dead.
And it comes back what you said in the earlier talk, Ramin, that for technology companies, which fintech companies are, you need a much higher initial seed investment before you can actually show anything. Yeah. And with anything, I don't even mean traction. You can't even show a product. Yeah? And you need a substantially higher funding right in the beginning. And for that, you actually need investors that think like founders. I mean, everyone says this. It sounds like a commonplace, but what I really mean is, when I hired my co-founders, or asked my co-founders, I didn't show them a product. I didn't show them 18 months of traction. They just left their job because they believed in the idea and they knew that it takes an upfront investment. And this is, I think, sometimes harder in Germany than in other countries. I would say that companies, I don't know, like Snapchat or so, it's like, not that they can't be invented here, they would have never gotten funding. Something new, something without traction. We sometimes complain about this copycat approaches in a lot of German startups, but the problem is also on the investor side. Yeah, they want something brand new, but it should be a proven business concept. Right. Yeah? And this is sometimes the struggle that we're living in.
And so for all, as the panel is called, fintech pioneers, so whoever wants to become a fintech pioneer, that is very, very true. I think venture capitalists very often just also invest in the first one there, like in the one who launched first and not in the best team. We realized it as well. We had our insurance broker launch at third. I think now we have the best team and the making the most contracts per day. But it was hard to get VC money because we were not first out there. And a lot of VC money went to marketing again. So, I mean, if I would sum it up, the fintech pioneers, you heard 3 great fintech pioneers, I would say believe. I think that's probably the strongest message in a product. Build a product which has a service which either is a complete new service to an industry as Blackbill, or making a service better in a field where there's already competition. Try then to build the trust you need and find the right partners who are helping you in trust, but in the end it's your core task to build up the trust, and there's no BO Siegel which can help you to get that trust. Thank you guys for being on stage.
Thank you.
Thank you, Carl.